While the worst may be over for Oklahoma's oil patch, energy industry experts don't expect the return of the boom times of a few years ago. Producers are now counting on slow, steady growth in the next few years while keeping a watchful eye overseas, hoping the bottom doesn't fall out of oil prices again.
It's been a roller coaster ride for domestic oil and gas producers in the last few years, as prices for oil surged to more than $125 a barrel, only to plummet to lows that at one point fell below $30 a barrel. Although oil prices began to recover last year, an uptick in shale oil production has led to a slow price decline in the first half of 2017. Steve Agee, the dean of the Minders School of Business at Oklahoma City University, says the consensus now among producers is that prices will likely be stuck in the 40s for the time being.
Probably not going into the $50 range until 2018 and maybe 2020 before it gets to the $60 range. So it's going to be a very slow process from what we can tell right now.
The latest quarterly survey by the Federal Reserve Bank of Kansas City shows energy producers believe a price of $56 a barrel for oil is needed for a serious expansion of drilling activity. Continental Resources CEO Harold Hamm went on record recently warning further drops in the price of oil would be unsustainable. But Agee says there are sweet spots, especially in the scoop and stack plays of Oklahoma, where the margin is not quite so high.
So I think you can drill wells and make money at $43 and $47 and $48 per barrel in the sweet part of some of these oil plays. But on the fringes and in some of the plays that are not quite as lucrative, it will take more, it will cost more.
Oklahoma Independent Petroleum Association President Tim Wigley says companies have been able to cut costs since the downturn in oil prices began, so the price at which producers can make a profit has come down.
One of the things that downturns force you to do is get more efficient, more effective in how you produce. And the industry's made great strides in the last 10, 15 years in that, and we have to assume that in the next 10 or 15 years we'll become even more efficient and effective in our technology.
Wigley says producers are also optimistic that a new administration in Washington will tap the brakes on regulation of the energy industry.
If nothing else, if we can just get some certainty on what the regulatory structure is going to be, that's going to be very helpful to this industry.
While the energy survey shows producers expect hiring in the oil patch to start picking up soon, Agee believes companies will be cautious about adding to their payrolls.
There's so much competition going on right now that it's hard to see an increase in price in the next 18 months, I would say. And as a result, these oil and gas companies are going to probably sit and wait until they're assured that that price is going to go up.
Meanwhile, they're still concerned about whether production cuts by OPEC nations will hold. This week, Ecuador announced it would no longer abide by the quotas set by OPEC, which Agee says opens the door for other OPEC nations to follow suit.
And so you get into another supply war, price war, so to speak. And so I think if that happens, and I don't know whether it will or not, but if it does happen, we could see another drop in oil prices.
While domestic producers are keeping a watchful eye on what OPEC does, Wigley believes the industry has weathered the storm.
While we have to be careful, with market conditions that are out there and the price of oil, remains somewhat sluggish, you can just sense that there's a more positive attitude about the future, and we certainly hope that's the case because the state of Oklahoma needs it.